There are literally hundreds of indicators now that make it an undeniable fact that this is the financial crisis, part 2. We have either matched or surpassed 2008 in countless ways. It has become so bad, yet all of this has been overshadowed by the US stock market having a small handful of stocks that have performed extremely well. But the actual real economy is in such a terrible situation. So what gives? You came here for the truth, so let me unveil that for you. Today, we are going to look at several indicators that will make your head spin. There's so many here. I'm going to try to squeeze it into one video. Let's see if I can do it. I usually can't. And now, let's begin. Total revolving credit owned and securitized. What you are looking at here is, in fact, something that has not happened since the financial crisis, and that is this rounding off. This has not occurred for a decade, but here we are today. You can see this here back in 2016 was actually a data revision, so you can discount that it happened previously, okay? Looking at this, it is yet another indicator on top of the pile of all of the other ones I have covered, showing you that we are in the financial crisis part 2. If you just discount for a moment the FANG stocks and their performance, and then look at all of the other indicators, there are literally thousands and thousands and thousands of indicators out there to determine if we're in a recession, if things are going well, if things are going bad, and so on. So if you want to know, you would look at all these indicators. If you just excuse the FANG stocks and their performance, which has been very, very good over the years, clearly, suddenly you see a very different picture of the US. Looking at this, I think, is extremely important, but it's just one indicator. Seeing this doesn't tell me that there is going to be a crash tomorrow. It just means that we have more and more evidence that is building that the actual real economy is not doing well. Forget about FANG stocks. I'm not talking about FANG stocks here, okay? Please. Talking about the economy. Look at this. Student loans owned and securitized. You can see that, congratulations, this has hit another new high. $1.5 trillion worth of student loans. And not just student loans, but that they are securitized. Same with credit card debt, same with mortgages, subprime, prime, doesn't matter. All of the debt is securitized. I've gotten into this so many times before. Let me just say it quickly. Securitized is basically they package it up and they sell it off to an investor. You take out, your credit card, you max it out. Let's say it's $5,000. Okay, you have $5,000 and you see it there on your statement. That's not there. That's not with that bank. That $5,000 has been packaged up and sold to an investor. And that's how they do this. They are able to use your debt as a way to make more money. You think it's just the interest payments and you're paying all that? Not at all. They're selling it off and they're making a fortune off of your measly $5,000. And of course, if that's $10,000, $20,000, $100,000, $1 million, whatever kind of debt you have, it just multiplies in these schemes and scams they call derivatives. Moving on. Civilian labor force participation rate. They've been making a big deal about this, saying that, oh, it's doing so well right now. Look at where it is when I zoom out. We're looking at levels that we haven't seen since the late 70s. So you're telling me it's good. I happen to disagree. You could see that as of 2000, it simply dropped off a cliff. How many things have I shown you over the years where I've said, the year 2000, it's dropped down ever since? So many times. I've lost count. Things started to change during, the early 2000s, but as soon as the financial crisis hit, we've never seen this before. Like this. It's been terrible. I mean, it's going back decades. And velocity of the M2 money stock. Okay, velocity of money, something I want to talk about just briefly. I've covered it here before as well. This has, you can see, turned up a little bit in recent time frame. And what you'll see in the news, if you ever see this, is that they point to it on such a short time frame. You can't do that. You might want to think about that, sure, okay, but look at this. Similar thing happened here, a similar thing happened here, a similar thing happened here, but in the end, it's come down. We need to look at the bigger trend, the bigger picture, and what I call zooming out. Don't be short-sighted. Take the blinders off, take the blindfold off, and see things for what it is. If you have to hear the truth, but the truth hurts, just take it like it is. That's how I like to do it. Like a band-aid, just rip it off, just deal with it today. Many people like to procrastinate on all of their problems, on all of their issues. I'm the type of person that if you tell me to do something, let me just do it right away, because if I don't do it right away, it's not going to get done. I'm going to do it right now. Right now. Okay? That's the way I like to do it. And of course, it extends onto everything that people have in their lives. Okay? Looking at this M2 money stock, the velocity of which we can see has slowed down. It's important in this fraudulent monetary system that we have today that it's all based on this currency. Currency, think current, needs to keep moving. Have you ever been to the ocean and it's been completely still? Of course not. The waves are always coming in. There's high tide, there's low tide, and things are moving and moving and moving. And that's just the way it works. It always comes in and it always goes back out. That currency needs to keep changing hands. If I earn $1, so I earn that dollar from my 9-to-5 job, I take it home, I give 50 cents to a family member, they go off and they buy something with it. I go to the store and I buy something with it. The store puts it in the cash register. The cash register, they take it out and they then go to buy some supplies with it. And they take that money and then they, goes in that person, that person, that person, that person. But if everything slows down, we have a very big problem on our hands because we don't have real wealth. We don't have a real economy anymore. It's all based on fraud and lies and untruths. So that shows up here in the velocity of money. A failed system happening right before our eyes, and no one's going to see it until it's too late. Do you think the people in Argentina right now today saw this coming a few years ago? Most of them didn't. Why? Because they were working their 9-to-5 jobs. They were dealing with their family problems. They had issues to deal with. Okay? They're busy. That's the way that life is. People are busy. They simply don't have time to see what's going on. They're tired. They come home. They don't want to learn about this stuff. They just want to put their feet up, watch some television, and fall asleep. And then they could repeat the next day and the next day and the next day. There are very few select people, many of which are here today listening, that actually care, that actually want to know, want to think about, hey, I've been working in the same job for 30 years. My wages haven't increased. I haven't been able to save a damn dime. And meanwhile, you got people around over here making billions and billions of dollars every single day, all based on this manipulated fraud in the stock market. Why are they able to get all the money? They're able to get all the loopholes. And me, I'm working my you-know-what off every single day, coming home and barely making ends meet. Doesn't sound like the American dream to me, or for myself, the Canadian dream. Looking at this, Industrial Production Index, you could see that's the blue line. And if we go back, we haven't seen this since, guess what? The financial crisis. Oh dear, here we are again. We're at basically the same level that we were at a decade ago. Why am I repeating myself all the time? That's industrial production, but real personal consumption expenditures has increased dramatically. Hey, I see a problem there. I see a great divide in between these two. People are spending more than they have. People are unable to account for all of this money. They've been racking up the credit card debt. They've been racking up the mortgages. They've been racking up all of this. And at the same time, the real economy isn't keeping up. Look at this, industrial production is still a decade behind. That's not a good thing, okay? I don't know how the media, they're so, whenever you see something silly like this, they only report the months that you see it turning up. Oh, it's up by 0.0001%, and then the stocks rise. Oh, what about the other months that is down by 3%, down by 2%? Oh, well, we'll just ignore it. We'll talk about kittens instead. Don't go anywhere. Make sure you click on part 2 of this video. I'm going to show you so many more indicators and pieces of information that put it all together. See you there.